Okay, let's try and unpack this. You've probably seen the headlines, maybe even caught some of the buzz online. We're talking about a digital coin, one tied to a really major political figure that launched and then just went on an absolutely wild ride.
Yeah, I mean, wild is definitely the word. Yeah. You saw this massive price spike almost out of nowhere, and then bam, a crash.
All fueled by, well, speculation, it seems, and that connection to, one of the most recognizable names globally.
And that kind of extreme volatility, that sudden up and down, it just leaps out from the source material we've been looking at.
Right.
That immediate explosion in value followed by the drop.
Yeah.
It's like a perfect little snapshot of the high wire act you see in some corners of the crypto market.
Exactly. So we've spent time digging through a whole stack of sources, news articles, some research papers, market analysis, all focused on this really fascinating and honestly pretty complex collision.
Yeah.
You've got politics, celebrity, and this incredibly dynamic, fast-moving world of cryptocurrency all crashing together.
And our mission here really is to guide you through this material. We want to pull out the most important bits of insight.
Yeah, get to the core.
Understand who the key players are, shine a light on some of the controversies, and really try to see how this fits into the much bigger picture.
Because there are major shifts happening right now in U.S. crypto policy.
Absolutely. And ultimately figure out, what does this all mean? For the market, sure, but also for you, if you're paying attention to this space, trying to make sense of it all.
And the sources we looked at, they paint a really compelling picture, don't they? You've got straightforward news reports covering the specifics, the nuts and bolts of these politically linked assets and the drama around them. But then you also have this deeper economic analysis looking at, okay, how is the market reacting? And what does this evolving regulatory landscape actually look like on the ground?
And I think the central aha moment, the thing that kept jumping out as I went through the material, is this stark contrast. You have the, let's be honest, seemingly frivolous, almost mean-like nature of these particular ventures.
Right, the fun, speculative side.
Running headfirst into some incredibly serious policy debates, fundamental questions about governance, about control, and surprisingly, some pretty complex internal conflicts bubbling up. That tension, that's really key here.
Okay, so let's start with that wild ride itself, because the sources lay out quite a story. The digital asset, everyone was talking about the Trump Heave meme coin, directly associated with Donald Trump.
Yeah, the sources detail its launch, happening just before his inauguration. It even popped up on his social media feeds.
And the market reaction.
Whoosh. Instantaneous, we saw the price just shoot up, hitting $75 within a single day.
$75, wow.
But, true to form for many meme coins, that peak didn't last long. It quickly fell back, dropping to around $39 initially.
Okay.
More recently, the sources show it trading in a range roughly between $11 and $14, though it did have another little spike, briefly touching $16.80 at one point.
The volatility is just staggering. The sources give this really concrete example. Imagine you put $100 in at the reported launch price, like $1.20.
Okay.
At that recent price, around $11.03, your theoretical investment would be worth something like $911.51.
Wow, that's a huge paper gain.
Huge. But you had to ride an absolute roller coaster to get there and, time it perfectly, which is almost impossible.
And this really gets to the core concept here. These are meme coins. The sources are clear on this. They typically have, no real underlying utility.
Right, not like a traditional stock or bond.
Exactly. Their value is driven almost purely by fun, with community hype, online buzz, and a lot of speculation. People use them to show support, sure, but it's obvious traders are also jumping in, hoping to catch the wave.
So what was the reaction from inside the, let's say, more established crypto industry? The sources report quite a bit of criticism, right?
Oh, absolutely. Pretty sharp criticism.
Yeah.
You saw figures like Danny Scott, he's the CEO of Coin Corner, calling it a mockery and basically a stunt. And Trump's own comments didn't help. Well, his public comments indicating he didn't really know much about crypto seemed to reinforce that view. For some critics, made it look less serious, maybe.
And then there was the structure of the coin itself. That drew fire, too.
Big time. The sources really highlight this point. Trump and his team reportedly control a massive 80% of the total coin supply.
80%.
Yeah. An analyst at K33, David Zimmerman, he described this setup as having horrendous tokenomics for a meme coin.
That sounds bad. Why Horrendous.
Well, that 80% control is a massive red flag in the crypto world. It's incredibly centralized. Now, the sources do note there are some technical mechanisms in place, supposedly, that shield smaller investors from an immediate sudden dump of that specific reserve.
Okay, so maybe not an instant rug pull from that stash?
Theoretically. But it still represents this immense concentration of power. It means a tiny group has huge potential influence over the market price. It's just not decentralized in any meaningful way, which is kind of the point of a lot of crypto.
And other criticisms pointed to maybe broader concerns.
Yeah, Dan Hughes from Radix saw this as part of a concerning trend, especially with political figures jumping into the meme coin space. He worried that sheer influence and potential liquidity manipulation, basically playing games with the price, could easily overshadow fundamental value creation.
So hype over substance.
Pretty much.
Yeah.
And Grzegorz Drads at Konotoxia, he felt these launches happening right around the inauguration were kind of degrading. He raised concerns about potential conflicts of interest and suggested they could even undermine the dignity of the people involved.
Okay, so clearly a lot of skepticism, even pushback from within the industry about these kinds of celebrity political coins. But was there any counter perspective, anyone seeing potential here?
There was, actually. Interestingly, Jeff Dorman over at Arca, he suggested that, look, regardless of the controversies, the sheer visibility of the Trump token sent a kind of signal. Yeah, like a message to every company, municipality, university, and individual brand that crypto can now be used as a capital formation and customer bootstrapping mechanism. He saw it less as a critique of the project itself and more as just a demonstration of crypto's potential reach for engaging with a big audience, a big base.
And the sources remind us this isn't actually Trump's first foray into crypto, is it?
No, not at all. He previously sold those superhero-style NFTs back in 2022, reportedly made millions from that venture.
Right, the digital trading cards.
Exactly.
Yeah.
And it's also worth just briefly mentioning, Melania Trump also launched her own meme coin, the Melania, right around the same time.
Oh, wow.
The sources note its value also fluctuated quite a bit. Started around $13, fell to about $2.70 per coin, but even then it still held a reported market value of around $700 million.
So the big takeaway then from this whole section in the sources, it seems to be, yeah, the theoretical gains looked massive during those peaks, but the fundamental nature of many of these meme coins is just extreme risk and volatility.
Absolutely. And history shows many similar coins have ended up causing substantial losses for investors who got in at the wrong time. It's a very risky game.
Okay, so stepping back a bit from just the meme coins, the sources also talk about a much broader feeling in the crypto market, right? Like a general sense of optimism, especially after the U.S. election.
Yes, definitely. You saw a real shift in mood. Right after the November 2024 results came in, the market was described in the sources as ebullient. That's a strong word.
Ebullient, okay.
And you saw it in the prices. Bitcoin, for example, reached a new all-time high, climbing past $104,000.
Wow, over six figures. That's up massively from before the election.
Hugely up. It was around $67,000 pre-election. And Ether, the second biggest crypto, also neared its own record highs, hitting around $4,000. That was up from about $2,400 before the election.
So these weren't just small bumps.
No. The sources indicate these gains were pretty significant, outside the usual day-to-day volatility. It suggests the market really saw the election outcome and the prospect of a new administration as a major positive driver. And it wasn't just Bitcoin and Ether. Other big assets like XRP and SOL also saw sharp gains.
And it seems like the market was kind of anticipating policy changes. I mean, Trump had made statements during the campaign.
Yeah, he'd said things like wanting to make the U.S. the crypto capital of the planet. And the new administration did act relatively quickly on that front, according to the sources.
How so?
Well, you saw a couple of key executive orders that the market was watching closely. The first one came on January 23rd, 2025. It was pretty broad, aiming to promote United States leadership in digital assets and financial technology.
Okay, general support.
Right. It laid out the supportive goals for crypto, and importantly, it included a specific declaration that the U.S. would not pursue a central bank digital currency, a CBDC.
Why is that CBDC point so significant for the market? What's the deal there?
Well, the idea of a U.S. government-issued digital dollar, a CBDC, has been a real point of concern for a lot of people in the crypto space.
Okay.
There were worries it could end up competing with or even undermining existing cryptocurrencies like Bitcoin, plus, potential privacy issues. So getting a definitive statement against pursuing one was generally seen as a positive signal for the decentralized crypto world.
Got it. But the sources said this order didn't actually cause a big price jump on the day.
That's right. The sources note there wasn't much visible impact on Bitcoin or Ether prices right when it came out. The thinking is maybe the market had already sort of priced in that general pro-crypto sentiment after the election results. It wasn't a total surprise.
Okay. Then there was a second order.
Yes, on March 6, 2025, this one established something called a strategic Bitcoin reserve. Now, interestingly, the sources point out that Bitcoin's price actually spiked a few days before this order was officially announced.
Oh, so news might have leaked out.
It suggests that, yeah, someone might have known it was coming. But then the market reaction to the reserve order itself seemed to cool off a bit once the actual details emerged.
Why was that?
Because the order specified that the reserve assets would come only from Bitcoins confiscated through law enforcement actions, seized from illegal activities.
Okay, so they're not buying Bitcoin on the open market.
Exactly. It means the Treasury can't actively intervene, can't buy or sell Bitcoin to try and influence supply or demand, like the Federal Reserve does with traditional bank reserves. So the practical market impact is much more limited than perhaps what some people might have initially hoped for or speculated about.
So the big picture here, pulling it all together from the sources, seems to be the election outcome definitely gave the market a shot of positive momentum.
For sure.
And while maybe the executive orders themselves didn't cause instant fireworks on the day they dropped, the shorter-term price movements around them show the market is really sensitive. It's watching closely for any substantive policy changes.
Yeah, absolutely. And policy influence isn't just about executive orders either. The sources also draw this connection between other presidential decisions, like, say, who gets nominated to be the next chair of the Federal Reserve, and the potential ripple effects on the crypto market.
How does the Fed chair connect to crypto?
Well, reports mentioned in the sources suggest that if the Fed were expected to cut interest rates, that could be seen as bullish for risk assets like Bitcoin. Lower rates can sometimes push investors towards assets perceived as having higher growth potential, even if they're riskier.
Okay.
And this gets tied back to Trump's very public calls for lower interest rates and his known, let's say, critical views on the current Fed chair, Jerome Powell.
Right.
Although the sources also add this layer of complexity. They point out that other potential administration actions, like imposing new tariffs, could actually cause inflation.
And if inflation goes up?
Then the Fed would have less reason to cut rates, maybe even need to raise them, which could counteract that potentially bullish effect for crypto. So it's not straightforward.
Okay, yeah, lots of moving parts there. This whole discussion on market reactions and policy signals, it leads us right into the regulatory landscape itself. And the sources describe that as being, well, on the verge, potentially a major shift, right?
A very significant shift, potentially. You're seeing new leadership coming into the key regulatory bodies, the SEC, which handles securities, and the CFTC, which handles commodities following the election.
And the expectation is?
The expectation, clearly signaled in the sources, is a potential move towards a less restrictive approach to crypto regulation compared to what we saw under the previous administration.
Okay, so what was the previous approach like?
Well, under the former SEC chair, Gary Gensler, the main strategy was what's often called regulation by enforcement.
Regulation by enforcement, meaning?
Meaning, instead of creating broad new rules for crypto specifically, they primarily used existing securities laws, often decades old, and filed legal actions, lawsuits, against various crypto projects and companies. Gensler's view, stated publicly, was that the vast majority of cryptocurrencies should actually be classified as securities.
And the main legal tool they used for that, as the sources discuss, was something called the Howey test.
Exactly. The Howey test. Now, this thing is old. It dates back to a 1946 Supreme Court case involving citrus growth, believe it or not.
The citrus growth?
Yeah. It's used to determine if something qualifies as an investment contract and therefore falls under securities law.
And how does it work? What does it look for?
It has three main parts, or prongs, it asks. 1, is there an investment of money? 2, is it in a common enterprise? And 3, is there an expectation of profits derived solely from the efforts of others? The previous SEC leadership applied this framework very broadly to crypto assets.
But the industry wasn't exactly thrilled with that approach.
No, not at all. The view from many market participants, as reported widely in the sources, was that this Howey test is fundamentally outdated and incapable of properly dealing with the unique characteristics of digital assets and blockchain technology. They felt that the enforcement-first approach, tackling things case by case through lawsuits, was just too particularized and burdensome. It didn't provide the clarity needed. What the industry was really asking for pleading for almost, was comprehensive regulatory guidance, clear rules of the road laid out up front.
And that's the new direction we might be heading in.
That seems to be the strong indication from the sources, yes. Especially under the nominated SEC chair, Paul Atkins. He's described as having a known favorable stance toward the blockchain and crypto industry. The expected shift is towards a formal rulemaking approach. And the CFTC, the commodities regulator, is also signaling interest in a new strategy.
Is the SEC actually doing anything concrete yet towards this rulemaking?
They are. The sources detail a couple of key steps already taken. First, they formed an SEC crypto task force back in January 2025, and significantly, it's being led by Commissioner Hester Pierce.
Hester Pierce, she's known for being pretty crypto-friendly, right?
Very much so. Often called Crypto Mom in the community. Her leadership of this task force signals a clear intent to develop clearer guidelines and, importantly, move away from relying so heavily on just bringing enforcement actions after the fact.
Okay, what else?
They're also organizing a series of roundtable discussions. The idea is to gather input directly from industry players, academics, investors, you name it. And they're actively reconsidering previous regulations. One notable move mentioned is formally revoking those earlier efforts to build a U.S. CBDC, which aligns with that executive order we talked about.
So this push for clarity seems really central, because as the sources point out, maybe the biggest hurdle for both the SEC and the CFTC is just figuring out how to categorize everything.
Exactly. You've got, what, over 10,000 different cryptocurrencies out there now? Probably more. The fundamental challenge is deciding which ones are securities under the SEC's purview, which are commodities under the CFTC, and which might be something else entirely, maybe falling outside both.
It's a huge sorting job.
Immense. It's the core of what the sources call the taxonomy challenge. And Commissioner Pierce, in her role, has actually offered a potential framework to get the ball rolling. She proposed a starting point with 4 broad groups for classifying digital assets.
Okay, what are the 4 groups?
So the first group she proposed is what she calls intrinsic securities. These are digital assets where the fundamental design, the code itself, makes it a security. Think of things like governance tokens that give you voting rights in a project, or tokens that promise you a share of future profits. They behave a lot like traditional stock or membership interests.
Okay, that makes sense. Group 1, inherent securities. What's next?
Group 2 is assets that become securities based on how they are offered, sold as investment contracts. This is crucial. Here, the asset itself might not inherently be a security, but the way it's marketed, packaged, and sold makes it one under the law.
So the context matters.
Hugely. The sources point to the big Ripple, or XRP, court case as a key example here. Remember, the judge ruled that XRP was a security when Ripple sold it directly to big institutional investors with certain expectations.
Right.
But the judge also ruled that XRP was not a security when it was sold on public crypto exchanges to everyday retail buyers who maybe weren't expecting profits based solely on Ripple's efforts. It shows how the sales pitch, the target audience, the trading venue, it all plays a role in the classification. It's complex.
Definitely complex. Okay, group 3.
Group 3 is tokenized securities. This one's maybe more straightforward. It's basically taking existing traditional securities like a corporate bond or a share of Apple stock and creating a digital representation of it on a blockchain, making a digital token that is the bond.
Okay, like a digital wrapper for old school assets?
Pretty much. The sources note this market is still relatively small, but it proves the tech works. It's feasible.
And the last group, the catch-all.
Exactly. Group 4 is simply all other crypto assets. This is the residual category for everything that doesn't fit into the first 3 groups, meaning they aren't securities. Commissioner Pierce actually suggested this could end up being the largest category by number of assets.
And what might fall in there?
Well, potentially things like the meme coins we discussed earlier. If they're not sold with promises of profit from others' efforts, maybe NFTs representing digital art or collectibles, or tokens that function purely as a medium of exchange, like a currency within a specific platform. Market participants are apparently really keen to get clarity on this non-security category quickly, so they know what's definitely outside the SEC's direct oversight.
And those roundtable discussions, are they looking at other stuff too?
Yeah, the sources mentioned they're tackling related practical issues. Things like, how do you safely handle custody of digital assets for clients? What should registration processes look like for crypto businesses that are regulated? How do you approach decentralized finance or DeFi? And even the idea of creating regulatory sandboxes, safe spaces to test out new innovations under supervision.
So the overall goal sounds ambitious. A predictable, legally precise, and economically rational system, as the sources put it.
That's the stated aim. But let's be realistic. As the sources themselves acknowledge, actually classifying over 10,000 unique digital assets, each with its own nuances under any new framework. That's going to be an immense challenge. It won't happen overnight.
Right. Okay. So while the market is digesting all these potential regulatory shifts, trying to figure out the future rules, the sources also reveal that within the specific world of Trump's own crypto ventures, things have been getting pretty messy internally.
Yeah, messy is a good word for it. There's been some significant internal turmoil and some red flags popping up that are definitely worth paying attention to, according to the reporting.
What kind of turmoil?
Well, the most recent situation involves a very public, very awkward dispute over a proposed official Trump wallet.
An official wallet. Okay.
So a website suddenly appeared promoting this wallet. It had backing from Magic Eden, which is a major NFT and crypto marketplace, and also from a social media account that specifically promotes Trump-related memes. Looked like a coordinated launch.
What?
But almost immediately, you had this public outcry, this disavowal from members of the Trump family themselves. Donald Jr., Eric, even Barron Trump put out statements saying basically the Trump organization had zero involvement with this specific wallet project.
Wow. So the family saying, not us.
Exactly. And Eric Trump reportedly went further, issuing a direct warning to Magic Eden about using the Trump name without proper approval. Strong stuff.
So what happened then? Did Magic Eden back down?
Apparently not immediately. Despite that very public pushback from the family, the sources say Magic Eden and the company behind the actual Trumpy coin continued to insist, at least initially, that the wallet launch was legitimate and affiliated in some way, creating a very confusing picture.
So who's actually fighting with whom here? What's the core conflict?
The sources suggest the main clash seems to be between two groups. On one side, you have World Liberty Financial, that's the crypto company set up by the Trump sons, Don Jr. and Eric, and apparently they were working on their own different official wallet.
Okay, so competing wallets.
It seems like it. And on the other side, you have Fight LLC. That company is led by a man named Bill Zanker, and they are the actual issuers of the Trumpy coin itself.
Yeah. Okay, so the coin issuer versus the family's crypto company.
Exactly. And remember, it's Fight LLC, along with the Trump organization's own entity called CIC Digital, that together control that huge 80% chunk of the Trump Pay coin reserves we talked about earlier, the ones reportedly worth around $2 billion on paper.
This sounds chaotic.
It absolutely exposes a fundamental issue, which the sources really hammer home, a complete lack of a clear governance structure. When you have family members and key business allies publicly disagreeing, making competing claims about who controls which project or who gets to use the brand, it just creates an incredibly high-risk environment, especially in a space like crypto, where trust and clarity are supposedly paramount.
And it must raise risks around the brand itself.
Huge risks. The sources call it brand dilution risk. Celebrity names are already prime targets for scams and unauthorized projects in the crypto world. This kind of public dispute with competing claims and finger-pointing, it highlights potential unauthorized use of trademarks and just a clear lack of oversight.
Which could lead to lawsuits.
Exactly. Lawsuits, reputational damage. As the sources note, even having Barron Trump publicly distance himself from the project signals what could easily be seen as a crisis of trust surrounding these affiliated ventures. If the family isn't even aligned, why should anyone else trust it?
And there were other concerns raised in the sources too, right? Something about foreign connections.
Yes, that's another significant red flag highlighted. The sources use the term opaque foreign ties. They mention reports of foreign entities, specifically naming the UAE's MGX fund and a Singapore-based firm called Memacor investing millions of dollars into various Trump ventures.
Investing millions and getting what in return?
Purportedly, gaining access to exclusive events and potentially influence. The sources also make a striking point that analysis shows over 80% of the top holders of the Trump coin itself are non-U.S. entities.
80% of the top holders are foreign.
That's what the analysis cited in the sources suggests. And these kinds of foreign ownership details, especially when combined with large investments and access, inevitably raise red flags about foreign influence and potential money laundering ties, as the sources phrase it. From a national security or financial integrity perspective, it's the kind of thing that warrants scrutiny.
And all these specific issues, governance chaos, the foreign ties, they can fuel broader criticisms, can't they?
They absolutely can. The sources mention criticism that the administration's generally crypto-friendly policy stance, combined with specific reported actions, like the SEC allegedly pausing investigations into figures like Justin Sun, who's described as a major Trump ally and investor, could feed accusations.
Well, accusations of what?
Accusations that maybe industry influence and political connections are being prioritized over robust consumer protection and maintaining market integrity. That's the concern being raised.
And is there any pushback against this, like from Congress?
Yes, the sources note that you are seeing moves in Congress. Specifically, Senate Democrats are pushing for legislation they're calling the End Crypto Corruption Act. The aim is explicitly to try and curb these kinds of potential conflicts of interest and increase transparency in the space, especially where politics and crypto intersect. Yeah. And you also have watchdog groups raising broader concerns about potential national security implications.
Okay, wow. So bringing this all together then, you've got this soaring market optimism, you have policy promises and some initial actions, this big push for regulatory clarity. And then right alongside it, you have this very specific, almost cautionary tale playing out with these meme coins. The volatility, the internal conflicts, the governance issues. What does this ultimately mean for you, the listener, trying to make sense of it all?
I think what the sources really lay out are these two almost parallel narratives running side by side. And it's critical to understand both. On one hand, yes, there's this very real potential for a more positive, more supportive U.S. regulatory environment for digital assets overall.
Right, the potential upside.
The market's reaction, the early policy signals, the talk of rulemaking, it all points toward a move for the kind of clarity and structure the legitimate parts of the industry have wanted for a long time. The goal there is fostering real innovation and responsible capital formation.
Okay, that's narrative one. The positive potential.
But then narrative two, driven by the specific examples of these politically linked meme coins detailed in the sources, serves as this powerful, blinking red cautionary tale. It highlights the extreme volatility that's driven purely by hype and speculation. It underscores the fundamental lack of real utility in many of these projects. And critically, it exposes the significant risks that get introduced when you have poor governance, a lack of transparency, and really ambiguous control over the brand and the project itself.
So the sources really draw a sharp contrast.
A very stark contrast between the potential for established, perhaps more fundamentally sound cryptocurrency assets operating under clearer rules, and the high-risk, almost casino-like world of ventures, particularly those tied to big celebrity or political brands that exhibit, and I'm quoting loosely from the sources here, things like competing claims of endorsement, opaque foreign investment ties, weak regulatory oversight, or internal familial conflicts.
Yeah.
The advice implicitly coming from the analysis seems to be prioritize projects with transparent governance, legal clarity, and unambiguous brand control. Those are far less risky bets than ventures showing the kind of red flags we've just discussed.
So understanding both sides of this coin, so to speak, both the big picture policy shifts that could shape the future landscape, and the specific pitfalls and dramas exposed by these high-profile, sometimes chaotic examples, that's really essential.
Absolutely essential. Whether you're thinking about investing your own money, maybe building something in this space, or honestly, even if you're just trying to make sense of where this technology is actually heading, being well informed about both the potential and the perils is crucial for navigating this incredibly complex digital landscape.
It helps you sort of differentiate, right, between what might be a genuine long-term evolution in finance and technology.
Exactly. And what might just be a speculative bubble driven by personality and hype with really shaky foundations underneath.
Okay, so given this tension, the sources revealed this pull between the desire for broad regulatory clarity, aiming for market efficiency and predictability, versus the messy reality we see playing out, the internal conflicts, the governance chaos, the brand disputes in some of these really high-profile politically linked ventures. What does the future of celebrity or politically backed digital assets really look like? I mean, are they just destined to be these fleeting, speculative bubbles, always fraught with these kinds of governance risks? Or could they somehow evolve into something more structured, more substantial, maybe even valuable in a lasting way? And if so, how would that even happen?